Hello, viewers. I welcome you all to this episode once again. My name is Sunday. Please, if you have not subscribed, I urge you to do so now. And if you have been watching my videos on how to become a forex trader from the scratch to a level where you can stand on your own and trade comfortably without any stress. Please, I want you to subscribe, all right? And if you have not, purchased any of our courses, please do. All you need to do is head to this website, all right? Then you just inbox us, all right? So that we can train you. Before you do that, we have enough materials so that you can continue to groom yourself before you even register. So by the time you now come for us to train you, you already have knowledge about it. All right, so it will even be a plus to us. So I've taught you guys on how to trade trending markets like the bearish and bullish trend and even sideways market. All right. But when the trend is consolidating, you stay away because it's not going anywhere. When it's consolidating, a period of consolidation, meaning that the buyers and the sellers, they have not decided to take, none of them is really participating in the market activities at that point. So you just see price just remain in one place. It's not going up, it's neither going down. So when you see open your chart and discover something like that, you stay off. Today, there's a topic I titled Effective Ways to Trade S and R. All right. The full meaning of X and R is support and resistance level. All right. It's very important you know all these things. All right. Because everything is centered on support and resistance. All right. Because if price is going up, it will get to a level, it will stop, it will retrace, or you call it moment of relief. It will gather a momentum and it will now push to the upside again and break that structure that was created high. Then, if it's a bearish trend, price will come down, push to the downside, then pull back to the upside again, gather momentum before it now push to the downside and break the low. So those points, we call them support and resistance. If you have been trading for a very long time, even if you're a professional, please, there's need for you to note all those things down so that you even fine tune the way you trade. Nobody is an island of knowledge. We learn every day. All right. So today, I call it effective ways to trade support and resistance level. Number one, you have to identify key levels. For you to be able to trade support and resistance level, you need to identify key levels. All right? Identify key levels. And how do you do that? You have to use your historical data to do the identification of what? The key levels. Look for areas on your chart where the price has previously reversed or struggled to break through. All right. Once you look at your chart, you see where price previously reversed or where price struggled to break through a certain level. These levels are what we tagged as support and resistance because once it gets to that level, it will struggle before it can break it, either going up. Now, this is what I'm saying. All right. If it is a bullish trend, this point here is what? Support level. Why this upper side here is a resistance level, just like you can see. So if price takes off from here, push to the other upside, create a high, then it will pull back to gather a momentum. This is a moment of relief because price cannot just start going up and start pushing like that. Even though price is to push from here to this point, it cannot just go once. It will push, price will go high, stop, then sellers will push it down, all right? Then it will stop. That point where it stops, okay, if it's going up, this point where it stops before you see a moment of relief, this is what we call resistance. Then when it's pushing to the downside, as it stops again before it start pushing to the upside to come and break this structure, this is what we call support level. And now for a resistance to be valid, there has to be more than at most, at least, I beg your pardon, at least two opposite candles. If it's been bearish, if it's been bullish, and now that moment of relief or retracement wants to start, at least two opposite candles. You must see two bearish candles. But there will be a time where one big long candle can push. Then you will understand that one is volume. When we get to that point, I will still teach you guys. Then when it now gets to this point, before it start to push to the upside, you see the bearish candle will stop, then bullish candle will start. If now to bullish to a bearish trend, once a price action takes off from here, it will create a low. That low becomes your resistance. Then there will be a moment of relief to create a high. In that point becomes a support level before price will now come and break this structure. All right. I hope that is very, very clear. So all these areas you see like this, they are your support and resistance. If I open a chart for you, a live chart, you will see, even though it's not that perfect, you will see all those points here. These are support and resistance. These levels are support and resistance. As it's doing that, it's going up. You see, these are support, these are resistance, support, resistance, support, resistance, support, resistance. So it's like that. Okay. So you must identify the key levels by using your historical data to look for where price previously reversed or struggled to break through a certain level. All right. And one thing you should also know is that you must use multiple time frames to identify support and resistance on multiple time frame. Now, the two time frames that I recommend for you is for you to use your daily chart and your weekly chart because it's the higher time frame that determines where price action will go, because that is where big boys plays. They don't come below 1 hour. All right, they stay, because most of them are position traders, or you see them, they are swing traders. They take position, they stay there, they know where they want to push the market from point A to point B. They determine what happens in the forex market. All right, so use your higher time frame like daily or weekly to map out those support and resistance level. Now, after you have marked the levels on your chart, use a horizontal line. All right, when you mark the levels on your chart, what do you do? How do you mark them? Use your horizontal line, or like something like this, to mark it out. All right. Now, once you have marked the support and resistance level out, this will makes it easier for you to see when the price is approaching this level. All right. After you have marked it, anytime price action is coming to that level, you will definitely see it on your chart. You will know that, okay, price is approaching this level. All right. So the third one is for you to wait for the price reaction. All right. Now, by waiting for the price reaction, then what you'll be looking for, a bounce or a break. All right. What you need to do is monitor the price as it approaches the support or resistance level. All right. Once you wait for the price as it's approaching those levels, you monitor it. All right. And wait for the reaction. All right. Now, you decide whether to trade based on whether the price bounce off the level or breaks through it. All right. Now, if now since you are waiting for price to get to a certain level, all right, once price gets to that level, all you need to do is that you will now decide, as soon as price gets to this level, I want to see a reaction. Once I see that reaction, all you need to do, you just take position. All right. Once you start seeing that reaction, you take position. And once you decide, or you have decided that once price bounce from that level or reject from that level, you take position. All right. You can take position, or you can wait for confirmation. All right. You look for confirmation signals like candlestick patterns. All right. Once price get to that level, you look for confirmation signal like price, like candlestick patterns, volume increase before entering that trade. Like once price gets to this level, for example, if price should get to this level and you want to go short, then you now look first to see whether it will give you an evening star or a pin bar rejection, showing that there is a selling pressure. All right, once you see it, then you will now decide whether to use an aggressive entry or a conservative approach for you to take position. All right, so I will explain. If you are to use an aggressive entry, enter a trade as soon as the price convincingly breaks through a support or resistance level. Or once price gets to this level, once price gets to this level, all right, if it is a bounce that you are looking for, you are waiting for price to bounce from here. Once price gets to this point and is rejecting, you see a pin bar rejection, and you now see an opposite candle forming, but be patient for you now for that candle to close. That is when you will now choose by yourself it is an aggressive or a conservative. Some people will just see, once they just see that there is an opposite candle, all right, they just enter. All right, sometimes you have to be patient, wait for confirmation. If you are to use confirmation entry, that means you'll be looking out for uh, candlestick patterns. All right, maybe lower low, lower close candle, or an evening star formation, or a pin bar. Once you see that, then you can now enter. All right. So if you are to use a conservative entry, you wait for additional confirmation before entering your trade so that you can minimize your risk. Because well, because we don't control the market. As it's going up like this, it gets to this point, you'll be expecting price to just get to this point and start pushing to the downside. It can continue going to the upside. So if you enter from here, it can stock you out. Or even sometimes you can even push up to almost this level before it start coming down. So you have to wait for confirmation. All right, like all those candlestick that will show you that price is ready to sell. All right, not using aggressive entry when you just jump in immediately because you just see opposite candle, you just jump in aggressively. Yes, there are times you use an aggressive entry. Maybe you just open your chart and you now see, oh, all my confluences are intact and my checklists are met. Now I can jump into this trade. All those things are still confirmation. You just look at it and say, okay, everything is intact. You are safe to take this trade. After that, the this thing you need to do is manage your risk. How do you manage your risk? You use your stop loss order. Always use a stop loss order to protect your capital in case the trend or trade goes against you, so that it will limit your loss. Is very important. And apart from that, position sizing. All right, under managing your risk, you need to use your stop loss order and position sizing to determine your position size based on your risk tolerance and the size of your stop loss. All right, I always tell people your entry first, then is your entry that will determine your lot size. I tell people because after your entry, where you now put your stop loss, that is now what will now determine your lot size. All right. Okay, you don't say I want to determine my lot size before you take your entry. You once you first of all decide your entry, then where you now put your lot size, that will now tell you what you are risking at that level. But if you now decide to now add to your position, yes, you can do that, but do it in a very wise manner. Then the last but not the least is to practice and also review your trade. Back testing. I always tell my mentee, all right, that you must do back testing at least 1 hour daily. All right. Your winning trade, even your losing trade, you must check them out to know where you make mistake and where you make mistakes so that you can correct it, note it down and correct it. And your success, the ones where you win, then how what makes you win, then you must check that and also to replicate it over and over again. So, guys, thank you so much. All right. And if you have not subscribed to my channel, please subscribe to my channel. If you have any comment, please drop it at the comment section. All right. And if you want us to train you, please DM us, send us a mail so that we can train you. Thank you so much and have a blessed